Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, April 6th, 2011. Well, folks, the markets had a sharp gap higher just above the pivot high from yesterday, which was a double top from Friday's high right here. We opened up there, but again, the markets could not hold their gains. And this is something we've talked about in yesterday's nightly video to the Research Center members. And again, you could take a free 1-week trial to that Research Center by going to InTheMoneyStocks.com and just looking for the banner for the free trial right there. In any case, the gap up took place today above that high, and the markets could not hold. And as I just said, we discussed this last night in the videos, how the markets look like there's massive distribution going on. And that's exactly what this is, folks. Distribution. Now, why would there be distribution going on here? Well, you have the institutional players after the market has run back up towards that double top 52-week high on the SPY here and on the S&P 500. Dow Jones Industrial Average actually hit a new high recently and so forth. They're unloading. The institutions are unloading, but they need buyers to unload into. So really, where are the buyers coming from? The buyers are coming from new money that's flowing into the market at the start of the second quarter. And it's genius. If you think about it in terms of this, it's genius for the institutions to be doing this. Because right away, 401k, new retirement money is going to be being pushed into the markets via the second quarter beginning. So all they're doing here, the institutions are doing, they're using that to unload. And that's why you're getting these gap ups or moves higher during the day, and then by the end of the day, the markets are coming back in. Monday, take a look. Gap up, the markets fade all day long. Yesterday, the markets had a small open lower, moved up to a double top. Then all of a sudden, the selling came in, pushed it back to the flat line. Today, you had a monstrous gap up. The markets, again, have faded now and are just slightly positive on a bounce. I actually gave a call to go long here at the 200 moving average for the members in the Research Center, intraday stock chat, and so forth right here at this 200 moving average. I gave it on Twitter, actually. For those of you that follow me on Twitter, go find Gareth Soloway on Twitter and follow me. I gave that call out. I said, go long at the 200. That's going to be your spot. Look at the move up since then. It was an easy scalp for about 10 to 15 cents, and if you actually wanted to hold even longer, you could be in the money as much as 25 cents at this point on the SPY in an intraday basis. All right, so again, beautiful bounce off the 200. The markets now are getting into very, very light volume. If you zoom in here, look at how light the volume is now over this lunch period, and that's why, again, you're letting the markets float back up. But the question to me will be, do we see a float back up in this double top range, and then do we see any selling come in as institutions continue to unload? And again, that's really what's going on here. Institutions unloading, which again generally is a pivot top area, although again it could go a little bit higher as they continue to unload. They want this market to continue to be bullish. And think of it from a retail perspective. If you're just an average investor who doesn't know anything, which is honestly 99% of all investors out there that are on the retail side, you're looking at this market and saying, listen, the Middle East is in chaos. Japan is is a mess. Europe is a mess. The US is somewhat recovering and looking better. If nothing out there can take this market down, not those things, then why not go into the market? That's what the average retail investor is thinking. Now, again, that's exactly what the institutions want you to think, so they can unload their positions into this, and once they're done unloading, then the markets can actually start to fall. The question is, how long will that take? It literally could take weeks to a month or so before that is fully in, if it's not already. So again, nice little pop. Notice the 20 moving average just got kissed in the blue line. Two trend lines, one being the blue line here, the 20 moving average there. That's a little bit of resistance. You can see a little bit of a pullback off that point. That's your short-term target hit right in that range, all right? So again, nice little move there. And again, we'll be continuing to watch and see how things play out here. But just a side note here, nice little pop on a couple of these small bank stocks. Take a look at BBX here, Bank Atlantic. Bank Atlantic, nice little chart down here. Good consolidation on the daily chart. Already up about 5 cents. Could pop towards $1 today. Deere, DEAR is another Dearborn Bancorp. Look at the pop on this play. Beautiful little pop on this bank stock. So the small banks are getting a nice little bid today, and it does look very, very sizable here, at least on the short-term basis for what these banks are doing. All right, again, we'll follow them very, very closely. All right. I will be making calls this afternoon on any bank stocks that I do find that look attractive, so be ready on the small cap side. I'll do it in the intraday stock chat. If you're lucky, I'll maybe even throw it out on Twitter after I give it to the intraday stock chat players, all right? Now let's go to a couple other stocks here. We'll pump the SPY back up, and you can see again the SPY is getting a bounce off the lows, but it's faded again for the third day in a row off highs and is back around the flat line. If we go to the dollar, this is very interesting, folks. The dollar is at their lows of the day, or just about. Again, we see the dollar fading. Yesterday, the dollar opened up and faded. Today, opened lower, but even more fading going on there. And a lot of times, you'll see a weak dollar help the markets to the upside. However, and this is big, folks, however, the analysis that I'm doing right now is showing me that oil has a major pivot at 110. The weaker the dollar, the higher oil is going to go. If we look at the USO today, with a weaker dollar, the USO is up about 8 cents. It's off the highs of the day, but it's still up on the day. So as oil approaches 109 to 110, the markets are getting a little bit anxious and a little bit worried. And I think at that 110 level, 109 to 110, that's why you're seeing the markets not enjoying a weaker dollar. Usually the markets love that weaker dollar. Commodities go up. Everyone's happy because the markets go up on that. Black box trading programs like that. But you're not seeing that today. And again, my thesis on that is, again, to say oil getting close to 110 is not something the market wants right now, and it's getting a little skittish as it closes in on that. So again, take a look at the GLD. Here's another commodity play. GLD's up 5 cents. SLV's up about 5 cents as well. Both charts, both commodities are slightly higher on a weaker dollar today, although they are losing their gains as well. It's interesting, again, because here you have oil. This is the silver chart, SLV right here. These have all faded off their highs. GLD, same thing, off its highs, and the market has as well. So everything's kind of going together today. The dollar, commodities, and the markets are all going together. That's somewhat unusual, but again, I do think it has to do with the fact that the markets are extended. You have distribution going on, and again, that oil trade getting close to 110 this morning was a little bit of a nerve-wracking thing for the markets. All right, stocks in motion today. What are they? Baidu's getting hit today. Nice drop on Baidu. This is just plain and simple an overbought situation, in my opinion, nothing more. Baidu's had such a run up, basically from 120 consolidation here all the way to about 143 to 144 as of yesterday's high. Profit taking is coming in today on Baidu, B-I-D-U. Cisco, good bottom made on Cisco, blasting higher today. This is actually something I highlighted in the mid to low 17 range. A lot of traders, again, looking for that to go to about the 18 level now as it pierced 18. 1785 was my first target, then I think about 1815 is the second target on that as it moves up. You can see the first target was based off a gap fill here. Second target is going to be right here at this pivot low, which, as I said, is around 1815, 1820 or so. All right, so that's your Cisco chart right there. But big move on Cisco. You haven't seen Cisco make a move up like that. CSCO is the symbol there in quite some time. Amazon is pulling back, guys. I called out this high yesterday beautifully. Take a look at this. See this gap fill right here? There's a gap fill right here from this gap. Closing price on the day of February 18th. We hit that today and pierced it. Look at the reversal that took place. Amazing reversal there. Nailed that call so beautifully. Gave it in the Research Center nightly videos. And again, remember, the videos are included in the Research Center. The hot charts and alerts, Pro Trader Watch List, Daily Market Report, Technical Tactics, you name it. No Hype live broadcasts are included. All that's included. You can go take a 1-week free trial. Get everything for 1 week before it costs you a dime. And you can check it out. You can cancel. No risk if you cancel before it's closed. You will not be paying. So again, strongly encourage you to try out that free trial. It's so worth it, folks. And again, the winning calls just continue to mount. All right, let's take a look here at Apple Computer. Apple Computer is a little on the weaker side today again, although not much. They're down about 25 cents or so. You can see it's still below these two moving averages, which is bearish short term. As long as it stays below these moving averages, you could be headed for a double bottom level down in this range right down here. American Express is having a very good day today. Solid day on American Express. I like the bullish consolidation on this chart. Take a look at that, folks. Nice move up. Look at the sideways consolidation and getting another move up today. This is the daily chart of AXP, American Express, and a good pop there. Short-term target would be obviously this double top up here, which is not that far away now on the upside. All right, let me just scan through my watch list. Chevron, which has been on a major run of late, is seeing some selling, and I think that's also part of the reason why the market's come in a little bit. Exxon and Chevron have sold a little bit, which, as we know, they're major components of the Dow Jones Industrial Average, so when they sell, chances are the market's going to be under a little bit of pressure as well. All right. Let me just go back to the SPY. We'll take a little bit of a look. And as you can see, the SPY has consolidated and started to consolidate just below the 20 moving average in the blue line based on resistance. There's your low pivot of the day. There's your gap up. Good fall to the downside to that 200 gap fill area. And that was your major level of the day on the long side. Good bounce off of it into first target. Now it's consolidating. We'll see if it floats up a little bit more later, or do we see the institutions continue to unload into it. All right, have a great rest of the day, folks. Don't forget, take that free trial, and you can follow me on Twitter, Gareth Soloway. Follow me on Twitter. Talk to you soon.